What's up, everybody? Hey, it is Mike Widmer with the Expansion Real Estate Group. Happy Friday to you. Welcome to March's edition of the monthly market update. Hope you guys are having an amazing day, amazing week, amazing start to the new year. We are getting settled in our new house, all moved in, getting things settled, but it's a lot, right? But had my first experience living on a horse property today with irrigation. About 5 o'clock this morning, get a banging on the door. And it's the guy that runs the irrigation. And I didn't know this, but when it's your turn for irrigation, if you don't open your valve for to flood your lawn, it floods the street. So he was banging on my door. I had to run out there quick and open the valve. So you learn something new every day. But we're getting settled in, and it's actually really quite exciting. So let's jump into your market update and see what's going on here with our real estate. So here is our trusty Cromford Market Index over the past 24 years now. And in all honesty, it's been pretty quiet. We started February at 117.5 and we started March at 116.9. So literally less than a point drop in the index. And if we look at it today, we're sitting at 116.3. So just really, truly kind of going sideways, as you will kind of see here in our daily chart. Really since the beginning of the year, just really staying flat. And, it's actually kind of unusual. We usually see some movement because for those of you that are new here, from the end of January till May is generally our busiest season. And we've just been staying kind of level. So as it's been a little bit slow, I'll just do a quick review for some of you new people here. On this Cromford Index report, this number right here, 100 is what is a neutral market. It's not better for buyers and it's not better for sellers. It's just even. And so right now when we're sitting at 116.3 today, it's just slightly better for sellers than for buyers. So when we look at these charts, the higher the number, the better the market. The lower the number, the better the market for buyers. The higher the number, better for sellers. Low number, better for buyers. So just keep those in mind as we look at this chart here every month. One quick thing here, just want to show you guys real quick. These are the 17 top cities in the greater Phoenix area, and Chandler's still number one. It dropped, I think 2 months ago, Fountain Hills was up there number one, but now Chandler's back up the top. Chandler, Gilbert, Mesa, Tempe. The East Valley is really doing some really good things here. So as we look at this and then kind of bring it up the bottom, pretty typical Buckeye and Maricopa on the outskirts. As the market slows down, those outer lying areas get kind of hurt. But both, we have 5 different cities that are in a buyer's market under 100,000. So market's staying pretty flat, pretty uneventful, but we'll keep on watching it. But I did want to show you guys one other thing. Not sure if you watched the State of the Union address last night, and this is not passed yet, but here's what they're talking about doing. Again, I think the government realizes that housing is totally unaffordable with the rates at 7% and prices still at all-time highs. Those two don't match for the everyday person. So what he was saying that he's going to try to get passed is to give, so it's two different kinds of things here. So one, first-time home buyers, and also anybody selling a starter home. And what they're calling a starter home is any home under the median value of your city. So here in Phoenix last month, I believe the median home value was $455,000. So if you sell your starter home to move up to a better home, you will get a $10,000 tax credit over the next 2 years. So basically $5,000 per year. Same thing if you're a first-time home buyer. I'm not sure if they are going to make it truly a first-time home buyer, or sometimes with these first-time home buyer programs, if you haven't owned a home in 3 years, there's some different rules that go around there, but we'll watch that. Again, this is not passed yet, but they are trying to create incentives for the entry-level buyers in this market. It's just such a hard market to get into, so they're trying to make that. It ends up being about a $416 a month credit, so not too bad, but again, just another way to try to increase production here in the home market. So we'll watch out and see what happens with that. And then also yesterday, maybe it was on Wednesday, the Fed chair, Jerome Powell, spoke, and he, they were, first of all, they were talking about doing rate cuts in March. Now, then they pushed it to, maybe May or June. Now they're saying third quarter. Okay, so they keep on pushing it out a little bit farther because they don't have inflation as low as they want it to go. So now they're saying they'll start to see some rate cuts in the third quarter. So what that means for us in the real estate market is it's probably going to remain pretty level over these next, at least until the summer. It is an election year, so I'd be willing to bet my bottom dollar that they will start to at least cut rates before the election because they want the perception of the government to be good by then. So we'll see what happens, but nothing really is happening right now. If you guys have any questions, if you're looking to do anything in the next 6 months, again, unless something major happens in the world, which is certainly possible, but it's going to be a pretty steady ride. So if you have questions on buying, selling, investing, anything that has to do with real estate or money, really, just feel free to reach out, and I'd love to chat with you and see if I can help. All right, have a great month. We'll see you next month. Bye.